Would you call it the same for the stock prices as well? Are we near the peak already for a lot of these names? 2024 was a solid run, and 2023 was a solid run, and so far in 2024 it hasn't been bad at all.
Yeah, I mean, autos has seen a stellar run. We've seen in Q4 a lot of earnings getting upgrades for OEMs. We think that the large part of the OEM upgrades in terms of earnings is behind us. Q1 will be keenly watched. There could be some OEMs who could see some downgrades, some OEMs retaining the numbers. A large part of the upgrades in the earnings cycle, in our view, is behind us, and then it will be mainly stock selective. It may not have a sector run as such as what we had seen in the last 8 to 10 months. It will be clearly stock specific outperformance and underperformance that one would want to track from here on, purely basis your earnings cuts and earnings upgrades that we will see.
So, kind of while everybody was very excited about, I'm talking about 6 to 8 months back, when TVS was around 1,000 rupees, 1,100 odd, everybody got very excited about this Ola Electric IPO and all of that. But actually the big move came in, if you can pull up the charts for last 1 year, in TVS, in Bajaj and Hero, because the legacy guys also had by the time Ola Electric became large or Ather became large, they had kind of developed their own some part of the EV two-wheeler business reasonably sized, and hence the value unlocking. Is that trade over now? Are these fair prices for most of the two-wheeler companies, pricing in both ends, legacy as well as EV part of the business, or some more room for re-rating?
Yeah, I think a large part of that has played out for the two-wheeler names. But if you see the overall volume growth momentum is still pretty resilient for the two-wheeler industry versus even a passenger vehicle or a commercial vehicle industry. And within that, we would like to be in names, who have structural levers of market share gains as well as margin increase, and which will give a very strong earnings growth. So one of them, of course, is TVS, second being Bajaj. So it's something, where valuations, yes, have been expensive relative to their historical valuations, but that has been the case for a large part of the market participants. So, we would still like to place our bets on companies which has a macro tailwind of earnings of volume growth for the industry outpacing the other segments. And in certain cases within that segments, companies who have levers of margin expansion as well. And, TVS seems to be one of them. So we would still have an outperformer rating on TVS.
Okay, so still positive towards TVS Motors. Thanks, Jay, for making time and speaking with us regarding a whole host of issues which are at play for the auto sector.
If you like this video, then like, share and subscribe to ET Now.